Today's video is a major warning to everyone in crypto land who may be feeling a slight bit of FOMO over the recent rally that we've had over the last few days and weeks. The reality is that this is the first convincing bear market rally that we've had, in my opinion, since we started crashing back at the beginning of November. Yes, there have been some waves, but this one is really starting to make people think the bottom is in. And this is a huge issue because I personally do not believe that is the case. Let me explain why. Because if you jump into these types of rallies, you will become a blood sacrifice on the highway to actually finding the bottom. There is so much to cover and there is so many reasons to be cautious. So please heed this warning and understand that rallies just like this are the poison pill that makes sure that you do not survive the actual length of the bear market. To be very clear, I plan to be buying in at the lows of this bear market and riding the next cycle and making generational wealth for myself and my family. And the way I plan to do that is by understanding the length and severity of this bear market and looking for the real pivot of the market, which we have not come anywhere close to. I'll explain everything about why I don't believe that this is the real pivot at the end of the episode. But first, let's go through some pretty interesting data that I see here online that'll help you contextualize how I see this bear rally. As always, if you guys are excited for these videos, keeping you safe and helping you find your way to the real value, the real cyclical upside in this market, then destroy that like button. And of course, make sure to subscribe to the channel as we have a whole lot more content coming for you. Stuff that is really going to make the difference, I believe, in helping people see through the noise and actually make it to the right side, the pivot of the market, where the real best opportunities will be found, because they are ahead of us. I believe that. Now, diving in here, we see that Bitcoin was here over $22,000 just earlier today. Of course, this was leading to a lot of people calling for a renewed bull market, a new breakout. It's recently come down off the highs just now, and I'll explain exactly why. But understand that this is not a real breakout, even though there has been several weeks now of bullishness. We've seen that since, really since the lows here at 19,000 on the 13th of July. But really, if we extend this out, we had our ultimate lows after the first crash in the 17,000s. It's been up and down, but not so bad over the last few weeks. And this happens after every major price correction. There is a bunch of sideways action trying to find a price. But if you follow my buddy Crown, or a new resource that I'll introduce you to today, that have been absolutely godlike in predicting price action, both of these people have called for a rally to 25K Bitcoin before a crash down to 15K Bitcoin. And that crash is going to be extremely brutal if you're sitting in anything other than Bitcoin, because alts will get sold off even more turbo. The ones that haven't already been sold off as much. Granted, there are some alts that have already been hit so hard, they probably won't move too much just because there's so much damage done. We'll talk about that on another episode, actually. But here you can see on July 15th, I retweeted the trap is set for the bear market rally. And that is absolutely true in my opinion, because we finally had enough collective amnesia, enough people feeling like there's too much negative sentiment in the market that you just have to have a rally. It has to go up. And so many people believe that it can't get any worse, so the bottom must be in because it can't get any worse in their heads. But understand the unprecedented nature of this true macro recession, which we've never had in crypto land, the changing of monetary policy, which is the most extreme since the 80s, and so many other factors, the cascading liquidations and forced selling from Three Arrows Capital, Celsius, and Luna. All of these things have made things way worse than they should have been way earlier. So that doesn't mean that the bear market's over, because the bear market is about much more than crypto. But we've had some significant Achilles heels and weak links completely exposed here in crypto land, mostly around centralized lending. As Wifey says, and by the way, Wifey Alpha is the other person who has called every single bear market rally and also warned that these would end horribly, which they have. Wifey says we are in stage 2 of this inflationary bear market. Stage 1 was the easiest. Effectively, you could just short it. And this stage was riddled with bear market rallies. As Wifey says here, it's only going to get harder, more savage, more brutal. Prepare yourselves, because Hades is coming. Stage 3 is the panic and stage 4 is the depression. And so as much as I want to say we're towards the end here, you must respect the time that bear markets take. Time is a very important factor here if you want to understand how long these things can last. Here's an absolutely shocking graphic here. The red line is our current reset here on the macro in the S&P 500, and this is every bear market charted here. Peak to trough declines of historical bear markets, declines of 20% plus without a 20% rally since 1929. A 20% rally from the bottom is effectively the way that you declare a new bull market. So understanding without the 20% rally, that's the way they say this is the extent of the bear market, right? So what you see is compared to every bear market in history, from a time perspective, the x-axis here, we ain't gotten anywhere close yet. In fact, we're not even in the middle range here. We're in the very early range here. And as far as percent declines here, we're also not in the upper ranges, meaning we've only lost about 20% here, but we've had declines of up to 70% here almost. In 1931, we see a horrible one in 1973, 1980. Look, we just need to understand that historically, we are not in the upper segment of bear markets yet. And also, historically, we're looking at somewhat unprecedented monetary conditions. You just need to be respectful of the conditions. And to me, that spells patience. As Darius Dale, who's called it so well since November, he hasn't called the bear market rallies as well as Wifey or Crown, but he's called the macro monetary cycle with precision. He says 3 risk management sayings worth remembering. You don't buy when there's blood on the streets. You buy when there's a catalyst to clean it up. Now, this is an interpretation of the Warren Buffett saying, buy when there's blood on the streets, be greedy when others are fearful, and fearful when others are greedy. And if you're a billionaire and can afford to buy and keep buying and keep buying, then buy away. But the reality is that we don't see a catalyst here to clean this up. And this plays in to what I'm going to talk about with timing here at the end of the episode, because timing this is not going to be rocket science. It's just going to be a game of emotions. But you need to wait for this catalyst to clean up the mess in front of us, which we don't see right now. And what he says is average and should be the most dangerous words in finance. And the number 3 that I want you to pay attention to is respect the x-axis. This number 3 plays in perfectly with what we were saying about the Wifey chart, which is look at the amount of time, the amount of days that most of these last, these bear markets. We are not in a position to call an end to this just yet. That would mean that we have one of the shallowest bear markets in history. And that could only probably happen with some intervention from the Fed like we had in the March 2020 crash. We have Mark here parroting some of these comments saying breadth watchouts usually attend cyclical bottoms, but can also occur in early stage of secular bear markets. June's washout warrants incremental exposure, meaning it's fine to buy on these big dips down to 18 and 17K, add some exposure, add some Bitcoin, add some ETH, add some of your favorite coin if you believe it'll survive this whole episode. But just know, in his opinion, the full allocation is not justified and you should be very, very careful in general. The point of this is to say you should not be fully allocating at any point because we don't know how long this particular cycle is going to last, and you want to keep dry powder. That way, if things go down a little further, you can allocate more and keep bringing that cost down. That's how you're going to get ahead of this next cycle. As Simon Rhee says, bear market rallies aren't driven by logic. They're an expression of relief. Consider them a splash of cool water in a relentless heat wave of bad news. They're ephemeral, meaning short-lived, but can move with velocity and persistency that makes them seem real. And the point is CT over the last few days has been absolutely on 11, claiming that the bull market's back. Macro analysis is just for the plebs. As you can see, the middle IQ people are screaming macro, but all, the low IQ degens and the 500 IQ wizards are saying, look, there's such a big crash, you got to buy it because there's a price rally. If you think that trading these lows into these sort of mid highs are going to be easy, then go ahead, do it. But I promise you, 99% of traders will get completely chopped up and wrecked doing this. Unless you've been trading as long as Crown has, or take this seriously as a profession, I wouldn't be trading these types of price action. I just filmed an episode with a buddy of mine named K-Money, and he got liquidated the other day because he was trying to short Ethereum. Look, trying to short or long right now, I think, is a path to Hades, as Wifey has said. So just be really careful and understand that if you want to make the biggest money off of this current situation, you need to wait for the macro pivot, which will not be made a secret. And it's not there yet. Now, I want you to understand this because this is a shocking statistic, right? The most powerful gains can happen during a bear market, but it's not going to be easy for you to catch them. In fact, it's going to be completely impossible for you to catch them. And in doing so, you'll probably fumble most of your portfolio because those days are usually followed by vicious losses, all right? Half of the SPX strongest days in the last 20 years occurred during a bear market. Another 34%, right? So now up to 84% of the strongest days of the SPX took place in the first 2 months of a bull market before it was clear the bull market had begun. That means that most of the strongest rallies rallies in the market happen when there's not a clear trend and you're pretty much doing more or less guesswork, or you're buying into a rally that is vicious and then gets clobbered. So just because you have the strongest day of gains ever doesn't mean that you actually have the bull market back. Understanding this statistic is really key to keeping yourself unemotional over the coming weeks and months as the true Fed pivot comes into clarity. So let's talk about what a pivot really looks like. Just today, just as I was filming this video, we got the news that Apple just stopped hiring. That means that the biggest company in the whole wide world has now just declared that they're scared of what the economic conditions hold for us in the near future. They are no longer hiring. They have scarcely ever taken their foot off the gas when it comes to expanding their empire. So this is causing major fear and uncertainty in the stock market. And you better believe that the folks over there at Apple have a good idea of where the market might be headed over the next sort of 30, 60, 90 days. The reality is that all signs are screaming big warnings. So if you think that a small rally out of Bitcoin and crypto is going to lead to a sustainable bull market, I have some swamp metaverse land that's got your name on it. The reality is that this stuff is going to take time to work itself out. In the end, in my opinion, what we need to see is something more or less break such that the Fed needs to blink on its strategy of aggressive tightening. Right now, the Fed only cares about inflation and is willing to completely incinerate the stock market and asset markets in the process of controlling consumer prices, because that's what's politically popular right now. So until we see the Fed start to blink on their strategy and devalue the dollar once again, which they absolutely will have to, because Dixie's getting way too strong. When the dollar's too strong, it will literally collapse emerging nations. It will make debt impossible to repay for our trading partners. It will make goods and services far too expensive to export from the United States. It's effectively a wrecking ball on the economy. So they need to devalue the dollar at some point and in some way, whether that's through yield curve control, through stimulus, through quantitative easing. There needs to be a pivot. And understanding that we are about halfway through the average length of a bear market, and that with another 6 months or so, we'll start to be in prime territory for the Fed to have said they've achieved their goals and now step in and control the recession. Because effectively what the Fed is saying is that they don't care about a recession, and they're effectively forcing one into reality. Well, guess what? After a certain amount of time, that's not going to be politically popular, and they'll need to be fixing that. So there is a Fed pivot coming. I believe that to the core of my bones. This moment of revival is in the future. But if you get chopped out chasing these bear market rallies, you will not be there to experience that pivot. And it won't be an immediate process. It'll be a long and slow pivot. It'll take a lot of time for people to regain their trust in crypto again. But the bounce will be glorious, and the return will be glorious, I believe. It's just going to take a ton of patience right now, because the time of the bear market is the biggest thing that people underestimate. They think that because we've gone down in percentage that it must go back up, but they forget about the amount of time that these markets cyclically take to correct. I saw a statistic that the asset markets are typically always in a bull market. About 80% of the time asset markets are in a bull market. But when they're not, you just need to understand that you either must be a pro trader to understand how to short, which by the way, the easy shorting days again are behind us. That was stage one. Now it's only the most savage pros. And remember how many institutional investors are still looking to lighten their bags and risk adjust. There is going to be so much selling on all these rallies. It's going to make it impossible for me to consider that any of these rallies is the real one until we see a clearly telegraphed Fed pivot. And that to me has got to happen within the next sort of 6 months or so, because at this rate, something's going to break, like we said on our previous video, and the Fed will need to step in and save the day. And when that happens, that's the time to back the truck up and start really positioning around these assets that are risk assets, because once again, the dollar will be aggressively devalued and those assets will gain versus the dollar. That's my philosophy. It's how I plan to ride this and create serious generational wealth over the next cycle, but it requires a huge degree of patience and emotional control during these bear market rallies. Remember, what Apple just said and just indicated and signaled is something highly significant. And even though it seemed like your portfolio might have been down quite a bit when we started talking about taking exposure off, the reality is that having been through the last bear market, I realized just how bad these things can get. And when you look back at your portfolio in January, in February, you might have thought, wow, that was horrible, what those losses I sustained. But understanding that it can go down another 80% gives you some real perspective. And so hopefully this content can help some of you out there. As always, I'm going to be doing my best to shoot it straight and tell you when I see bad news coming or good news coming. And if that's value to you, make sure you subscribe, because I do believe that we're going to be living through generational, once-in-a-lifetime opportunities over the coming months and years. But if you get chopped out and you lose your stack chasing these rallies or being emotional, you won't be there to see it. I sincerely hope this video has helped you. Please smash that like button and follow me on Twitter at EllioTrades. As always, I will see you very soon on the next episode.